What if I told you about an ETF that climbed nearly 300% in the last year and has lost an average of 22% every single year since it launched? Both numbers are true at the same time. Welcome to LABU. LABU is the Direxion Daily S&P Biotech Bull 3x Shares ETF, issued by Direxion. Launched in May of 2015, it holds positions in roughly 168 biotech and pharmaceutical names by tracking the S&P Biotechnology Select Industry Index. As of early May 2026, LABU manages about $555 million in assets. But here is the single most important word in the entire fund name: daily. LABU is engineered to deliver 3 times the return of biotech for one trading day. Not a week, not a year. One day. Every night, the fund resets that 3 times exposure using swaps and derivative contracts. Tomorrow's 3 times is calculated against tonight's closing price, not against your original cost basis. That daily reset is the catch most retail investors completely miss. Direxion even warns about it on their own product page. Because of how the math compounds, holding LABU for more than a few days can produce returns that look nothing like 3 times the index. If biotech drops 10% on Monday and rises 10% on Tuesday, the underlying index is down about 1% overall. LABU, after fees and the daily reset, can be down closer to 9%. Volatility quite literally eats the fund alive. Why does this catch exist? Because LABU was never designed to be a buy-and-hold investment. It was built as a high-octane tactical tool for traders who want amplified exposure to biotech for a session or two. The product page literally calls it a daily trading vehicle. The performance numbers tell the whole story. Over the past 12 months, riding a biotech rebound, LABU has surged about 297%. Spectacular on a chart. But since launch in 2015, the average annual return is negative 22%. That gap is the price of daily reset compounding combined with biotech's extreme volatility. The fund's 52-week range is $44 on the low end and $212 on the high end. That is a swing of nearly 5 to 1 in a single year. Who is LABU actually for? Short-term traders who are bullish on biotech for a specific event, like earnings, an FDA decision, or a sector rotation, and who plan to be out within days. It is not a long-term portfolio holding. It is not a retirement account product. The expense ratio is also worth noting at 0.96%, which is high for an ETF, and that is on top of the volatility drag built into the structure. So here is the honest reality check. LABU can multiply your money in weeks. It can also vaporize it just as fast. Treat it like a power tool, not a savings plan. Question for the comments. Would you ever hold a 3 times leveraged ETP for longer than a single trading day? Or is daily only the only sane approach? Drop your take below. If this breakdown helped, hit like and subscribe. We cover one EFI ticker at a time, every single video. See you in the next one.